Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at 3 companies that Goldman Sachs have rated as a buy now with a lot of potential upside going forward. We have a list of 20 different stocks all rated as a buy from Goldman Sachs with the most potential upside over the next 12 months. So I've gone through this entire list and I've selected 3 companies to discuss in the video. We're going to go over the company's current history, their recent financial performance, and their future growth projections from other analysts on Wall Street other than Goldman Sachs. And overall, I selected 3 companies that I do not own in my personal portfolio whatsoever, but I do believe have the potential to grow not only over the next 12 months, but for many years going forward. And I chose 3 companies from 3 different sectors of the market to give you a diverse look at what Goldman believes are a buy now in the current market environment. So before we jump into stock number 1, I'm going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first company we're going to go over today is ticker PENN, which is Penn National Gaming. They currently trade for $74 per share and are up by 141% on the 12-month chart, with the market cap over $11.6 billion and a forward PE ratio right around 27. And if we take a look at the company's recent stock chart, from a high point at around $136 per share back in March of 2021, the company has now fallen by over 45% back down to their current level. So a major pullback in Penn National Gaming stock as the entire market rotated out of the high-flying growth names and into more value players. And we can see that Goldman actually has this company as the number 1 stock with the most potential upside right now, and ticker Penn currently has an upside of 94.8% from the current share price to Goldman's current price target. So the big investment bank sees a ton of potential upside and a major rebound coming from one of the faster growing casino and online gambling companies. And if we take a look at their latest quarterly performance, we can see that total revenue in Q1 2021 was around $1.27 billion, which is down 6% from Q1 2019. So the company's doing their comparisons to 2019 to compare a pre-pandemic level versus what they're doing right now. And in Q1, their net income did grow 78%, which is a great sign, to around $91 million. And overall, their adjusted EBITDA was up 7% year over year as well. And if we take a look at revenue in just March and April, so the end of Q1 and starting of Q2, we saw some nice numbers. It was up 8% in terms of total revenue, and their margin did improve as well to around 39% overall. And taking a look at the balance sheet, which is pretty important for a very young company still in the growth stage, they're in a much better position in terms of liquidity compared to where they were just 2 years ago with around $2.7 billion. Their traditional net debt is down, which is a great sign, and their lease adjusted net leverage is also in a stronger position. So overall, the company's done a great job of improving the balance sheet throughout the time of the pandemic when they didn't really know what was going on in the overall casino industry. They used their capital to improve themselves, make sure they're in a better financial position, and I do like where they're sitting at this current level. And of course, if we take a look, they're not completely slowing down, and some segments of their business have seen some incredible growth. The South segment is leading the way, and after pandemic restrictions were reduced, they saw total sales at 103% of their 2019 revenue. So overall, they more than doubled from where they were back before the pandemic started. So overall, the South is doing very well for Penn National Gaming, and that's where they plan to expand to over the next few years. And if we take a look at future growth projections from other analysts on Wall Street, we can see that the average expectation is for around 142% annual expansion in their earnings. And right now, the stock is considered a light buy, coming in at a 2.4, and the $74 share price is well below the 12-month expectation of $107 per share. And we can see other firms like JP Morgan, Rosenblatt, Trust Securities all maintain a buy rating on the stock as well, similar to Goldman Sachs. So Penn National Gaming is definitely a company worth taking a look at. They were the number 1 company listed on Goldman Sachs top 20 with the most potential upside going forward. Like I said, I don't own this company in my current portfolio right now, but definitely a stock I'll have on my watch list and keep an eye on them going forward. So that was stock number 1 in this video, and now if we move on into company number 2, we have ticker CRM, which is Salesforce. They currently trade for $250 per share and are up by around 29% on the 1-year chart. This is a mega cap tech company with a current market value at $230 billion, with a forward PE ratio right around 64. Taking a look at Goldman's article, they believe that Salesforce can grow another 32% to achieve their 12-month price target. Another 32% expansion in the share price, even from their current level and the massive run-up they've already seen over the past few months. So overall, Goldman Sachs does see a lot of potential in this company to continue to expand. They've made some major acquisitions as of late, should help the company reach new markets and grow their total customer base, leading to total revenue and income growth over the next few years as well. And if we take a look at their Q1 for their fiscal 2022 performance, we can see that Salesforce is the number one customer relationship management software provider worldwide in terms of revenue for 8 consecutive years. And they have seen massive revenue growth as of late as well. Consistently delivering durable revenue growth, they've more than doubled their top line from $10.5 billion back in fiscal 18 to $21.3 billion in fiscal 21. So through their recent acquisitions and operating activities, they have seen a massive explosion in their total top line. And if we take a look at the numbers over the latest quarter, they posted some very strong results as well. Total revenue just under $6 billion, growing by 23% year over year. Their current remaining performance obligation up 23%, their total remaining performance obligation up 19%, and overall the earnings per share grew 355%, and what's very impressive is the company's operating cash flow was up 74% year over year as well. So overall, the company's doing a great job, the financial numbers are looking strong, and I think they're going to continue to perform well over the next few years going forward, and I think Salesforce could be a nice growth player for more than just the next 12 months, but for many years over the longer term. And we can see total revenue on a quarterly basis continue to tick upwards with improving margin. And overall, their non-GAAP operating margin grew 710 basis points, and their GAAP operating margin was up 880 basis points overall as well over the past quarter. And this company is growing in multiple different ways. They have 4 different types of products within their overall portfolio, and all of them saw nice double-digit growth year over year. So not solely focused on growing one segment, they're not reliant on one single category of their goods to fund the total growth, a nicely diversified business with lots of ways of expanding their total revenue and income over the next few years. And what's impressive is the remaining performance obligation. So this is revenue that's current and in the future under contract right now, and of course that represents their future performance obligations under contract. So we can see back in Q1 2020, that sat at around $25 billion. But they've continued to sign on more deals, expand their business, get more customers, and that has now grown by $10 billion at the end of Q1 2022, and is up 19% year over year. And that's a strong sign. There's $35 billion of future revenues under contract for this company going forward. Of course, they still have to perform the work, but that's revenue we know is going to flow into the business over the next few years overall. And we can see, according to Wall Street analysts, they're expecting another 10% annual expansion for the stock per year for the next 5 years. And right now, the company is considered a buy, coming in at a 1.9, and the current share price of $250 is below the 12-month expectation of $278 per share. So overall, analysts on Wall Street do see a ton of potential in Salesforce as well, not only Goldman, but they do see a lot more, with future expected growth of 32% to get to the 12-month price target. So Salesforce, a big tech giant worth over $200 billion, they've seen some massive expansion over the past 5 years, up 210%, and definitely a company to take a look at. Goldman has their eye on them and have ranked them as a buy now. And now we're going to move on into the third and final company I've selected from the list of Goldman's top 20 stocks with a lot of potential upside going forward over the next year. And ticker number 3 is BMY, which is Bristol Myers Squibb. They currently trade for $66 per share and are up by 13% on the 1-year chart. This is a big pharma/healthcare company with a current market cap at $150 billion and a forward PE ratio just below 9. So a ton of value coming with this player in the market right now, especially when we're sitting at an overvalued price point. So that may be why BMY is included on Goldman's list with a lot of potential upside going forward. And this is a nice dividend payer with a yield right around 3%. And if we jump over to Goldman's list, we can see ticker BMY, and they're projecting at least 34% upside over the next 12 months to get to their price target. So BMY, typically a boring, really not talked about company in the pharma space, has a lot of potential upside according to one of the largest investment banks in the financial world. And if we take a look at their Q1 report, they did not too bad. Sales of $11.1 billion in Q1, which grew 3% year over year. So of course, pretty much the pandemic is still going on, but some big pharma companies were not impacted negatively, so a little bit of growth year over year is still a pretty strong sign. And if we take a look at their financial strength, they see continued revenue and earnings per share growth going forward. They affirm their guidance, which is a great sign, and they've actually done a great job of reducing some debt, paying down $4 billion in the quarter, and bought back $1.8 billion in shares during the first quarter as well. So they're doing some nice share buybacks, returning capital to investors in that way, while also bringing down their total debt level. And over the first quarter, some of their key products did well, sliding some nice growth. We can see 9%, 6%, 8%, 15%. Some of their other products did do bad, losing 3% sales year over year, and one pretty big decline, down 10% to only $500 million. But overall, many of their key products still see some growth, which is good to see. And if we jump over the company's income statement, after some recent acquisitions, they have seen a massive spike in total revenue. $19 billion back in 2016, up to 20, 22, 26, and then all the way up to over $42 billion in total revenue during the trailing 12 months after a few minor acquisitions. So overall, this company has continued to grow very well. They're using acquisitions to expand their business and become a larger player in the pharma space. And we can see they have been posting a net loss as of late. They did have some increased expenses due to the pandemic. And I think going forward, they will go back to being a highly profitable company with billions and billions of dollars of total net income. So overall, BMY is a very interesting pick. I don't know too much about this company. I'm not a major player in them. And like I said, I don't own any of the 3 stocks that I've gone over in this video. But this is definitely a dividend paying name with a low valuation at this current level worth taking a look at if you want to follow Goldman Sachs recommendations. And we can see right now they have a dividend yield just below 3%, an annual dividend payout ratio of only 26% of their net income. So it is very, very low and very sustainable at this current level. And the 5-year dividend CAGR sits at around 5%. So although the dividend growth isn't massive, you are outpacing inflation year after year, which is a pretty good sign. And we can see going forward from analysts, they expect 8% annual expansion every year for the next 5 years. And right now the stock is considered a buy or a slight strong buy, coming in at a 1.9, and the $66 current level is below the $75 price target from analysts from multiple different firms. So overall, Goldman Sachs believes that this company can grow another 34% or 35% to hit their set price target. And BMY, the big pharma player, is a company I've added to my personal watch list as well. If Goldman believes there is that much upside going forward, then it's definitely worth me keeping my eye on. I don't own many players in the big pharma space, and when we see the company trading at a low valuation with a dividend yield at around 3%, and we're projecting over 35% upside going forward over the next year, it doesn't hurt to have on a watch list to keep your eye on going forward. So Bristol Myers Squibb was the third company we're going to take a look at in this episode. We've gone over 3 names from Goldman's list of 20 different stocks with the most potential upside right now. Of course, we took a look at Penn National Gaming, we took a look at Salesforce as number 2, and finally the third company that I selected from the list of the top 20 was Bristol Myers Squibb. 3 companies I do not own in my personal portfolio right now, but I definitely will be keeping my eye on them going forward. And now I'm going to wrap up the video. I want to thank you for watching all the way to the end. Please hit that like button and subscribe if you already haven't done so, and I will see you in tomorrow's episode.